Is Pallavinatha. And over the next 30 minutes, we'll bring you IQ insights on various stocks and counters. But first off, let's have a quick look at where markets are at. You're seeing the Nifty trade at very close to the day's high, if I can call it. It's 0.5% higher on the Nifty. We've seen a bit of a breakout that's happened, and we're sustaining above or very close to that 21,900 kind of mark. Let's have a look at the heat map to try and determine which ones are the top gainers and top losers. But right off the bat, we're seeing gains from the likes of HDFC Life, which is up 4%, was lower yesterday. But you have also the likes of Maruti, TCS, Wipro, all gaining 3.5% plus in trade. So it's a positive day of trade. In terms of contributories, you can see the likes of a TCS, Infi contributing to gains, and you can see the likes of a Bharti also on the back of the numbers. TCS, mind you, had a positive note coming through, and that one is higher as well. So an HSBC note which came through on TCS. In terms of the top laggards for the day, let me quickly take it to that. You have the likes of a Power Grid, which has gained consecutively over the last couple of weeks. We've seen IndusInd Bank, which is down 1.5%, Bajaj Finserv also trailing, and an ITC also is down. Let's look at quickly where the broader markets are sitting at. You're seeing the Nifty mid cap around 0.2% higher. The Nifty small cap also trading roughly 0.5% higher. So we're seeing gains on both of those counters, largely in line with indices. Taking it quickly to the Bank Nifty, which is 1/3% lower in trade today, surprisingly. Apologies. We have the Nifty Auto, which is up 1.2%, which is one of the top gainers. You also have the Nifty IT, which is up 2.5%. That one's really stood out in trade for me, Pallavi. Quickly looking at IT contributories, and you'll see a whole host of pretty much all the contributors contributing to solid points on the Nifty IT. Pallavi.
Thanks a lot for that, Hersh. Now, moving on to the big stories of today. In an update, in the Paytm case, promoter Vijay Shekhar Sharma met RBI officials yesterday. Muralidhar Swaminathan joins in. Murli, what have you been hearing from your sources?
Okay, so let me just put this news in perspective. Ever since the RBI took action, there has been a lot of news coming in. What we heard from our sources today is that yesterday Vijay Shekhar Sharma, the promoter of Paytm, sought an appointment with RBI officials, heard him. I'm re-emphasizing, they just heard him. They didn't respond, as in they are not giving into any request or any demand. That's one part which is very clear. The second part of the story, which is more important, is that Vijay Shekhar Sharma, in fact, Paytm has approached some banks. To be specific, my source told me 3 private banks were approached, but all the 3 banks very clearly said that nothing to do at this stage. We would like to wait and watch, as one of the banks is saying. We would like to wait and watch, and we'll see how the case goes on, because at the core of this is the KYC, which is very, very critical in banking, as you know.
Right. So that's, of course, on Paytm. Thank you so much for bringing us that. That's an NDTV Profit exclusive. Of course, we'll keep a track of what's happening with regard to that counter. But at least at the moment, you're seeing Paytm trade 6% higher after 3 consecutive lower circuit days that we've seen on that counter. So definitely some recovery that we are seeing on Paytm. But I want to switch focus from Paytm to Triveni Turbines. Stock is buzzing in today's trade. After a solid set of numbers, the stock is up roughly 18.5% as we speak. Now, on the frontline numbers itself, of course, we have Anushi joining in for all the perspective with regard to this particular counter.
Right. So on Triveni Turbines, as you mentioned, the stock has gained about 18%. Even if you look at the volumes, strong volumes in this counter, with its volumes buzzing at about 22 times its 30-day average now. So this was on the back of the Q3 results which came out yesterday, wherein we have seen strong set of numbers like the revenue, PAT, margins, all beating expectations. So the revenue saw about a 33% of an uptick. For the same story for the EBITDA as well, 33% an uptick over here, while the net profit moved to about 30% uptick at about 68 crore of profit. However, the margins did remain flat at about 19.4% range. But Harsh, what I want to emphasize over here is the kind of order book status that they have had over the last 9 months, in which the order booking rose about 27% at rupees 1,443 crore. In this period, with about exports seeing about a substantial growth of about 60%. So with this, the export contribution also rose to 53% compared to 42% earlier. The management did emphasize with a strong growth in exports, they can also see this adding to their margins as well. So that's on the lookout. Again, if you look at the total outstanding order book, that rose about 28%, and which now stands at rupees 1,575 crore as of December 23. So Triveni Turbines definitely a watch out on this.
Thanks a lot for that, Anushri. Now, another stock that's in focus is Airtel. The telecom operator came out with their Q3 earnings. The stock is up about 3% in today's trade. The company's net profit has jumped 37%, while margins have contracted marginally. My colleague Smriti joins us with more on this.
Yes, Pallavi, you rightly mentioned that profit jumped and margin was largely flattish because of 5G capex spends that kind of capped the margin there, and that has been the case for the last couple of quarters. But in the next year, FY25, we're going to see some moderation in capex to happen. That'll help increase the profits and the margins as well. If you look at the other set of numbers where revenue and net profit, they were largely in line with the street's estimates, and we're seeing that as the stock is up and about in trade today. And however, the positive surprise was on the ARPU front, the average revenue per user that came out at 208 rupees versus 203 in the last quarter. The street estimates expected to be around 205 rupees. So that's a positive in terms of the results. The second positive was the capex spends in this quarter. They were largely flattish at around 775 crores. That's for India. And that's similar to the one in the previous quarter. So that's also kind of helped the profits. However, the negative that the profit had was the devaluation in two of its African currencies, which kind of had a little bit of an impact on profit. If there was an exception loss of about 130 crores. Looking at brokerages, Citi continues to remain positive. It reiterated its buy rating, and with a price target of 1270 rupees, it says that solid execution and effective premiumization are yielding results for the company. On the other hand, Morgan Stanley also is on an equal weight with a price target of 1015, which was crossed today itself. The capex was stable sequentially and surprised positively. As I mentioned, there's decline in EBITDA margin. It says that this decline could be a reflection of investment by the company. But we're going to track the con call this afternoon for Bharti Airtel and bring you more on that.
Absolutely. We'll give you all of those updates with regard to Bharti Airtel and what they're suggesting in their management commentary as well. Stay tuned to NDTV Profit for that. I'm going to quickly switch over. Britannia are going to post its third quarter earnings today, and according to Bloomberg estimates, company will see another soft quarter. Sesa is here with all of the details on what we can expect.
Right, it's like you said, it's going to be another quarter of soft top-line growth as the company laps a high base, given that the pricing continues to anniversarize. Now, on a year-on-year basis, Britannia's revenue is expected to grow 2.4% at 4,296 crore, according to Bloomberg estimates, and net profit is seen down 41%. Now, it is important to note here that the steep decline in net profit is due to a one-time gain in the base quarter. If we look at the Q3 FY23 numbers, Britannia gained around 356 crore from the JV agreement with France's Belsa Group for the cheese business. Now, as far as the operating performance is concerned, EBITDA is expected to be flat, while margin is seen to contract at 18.9% versus 19.5% a year ago. Higher advertising spends is expected to dent the EBITDA margin. However, since there is no major risk on the commodity front, gross margin is expected to improve. Now, the company has also taken price cuts through grammage reduction in some categories, and that is expected to drive volumes in the rural markets. However, competition from regional players remains high, and that would keep a check that would keep volumes under check. Volumes are estimated to grow at about 1 to 3% in Q3. Now, the key management commentary to watch out for would be demand outlook, update on the core business segment, and also the progress on the cheese portfolio, raw material price trajectory for the pricing actions, as well as competitive intensity.
Thanks a lot for that. Britannia set to announce its results today, and we'll continue to track that for you. Moving on, another day and another update on the Sony Z merger case, with the NCLT set to hear the merger plea today. My colleague Charu Singh joins us with more on this. Charu?
Hi, so the Z-Sony merger termination dispute is far from over. The NCLT bench of Mumbai today heard the petition filed by Z Entertainment Enterprises against the termination of merger by Sony, and they have asked Sony to give a reply to the petition in 2 weeks, and the matter has been adjourned to March 12. We should also remember the fact that Madman Film Ventures, which is a subsidiary of Z Entertainment Enterprises, also came forward with a similar case asking to implement the merger that was approved by NCLT last year in August. And this litigation by Madman Film Ventures was called a proxy litigation, and the party was called a proxy on behalf of Z by Sony. However, NCLT bench in that hearing had said that it is the right body to adjudicate on the matter, and now both the matters have been listed for March 12th, and let's see how the litigation unfolds.
Thanks a lot for that, Charu. Now it's time to slip into a very short break, but stay tuned. We have a lot more on the other side.
Welcome back. You're watching Market IQ here on NDTV Profit. Thanks for staying tuned. Our next stock, which we're going to try and break down, is Varun Beverages. Came out with their December quarter earnings yesterday. Profit was up 76%. Stock is up 2.8% in trade as we speak. Several brokerages continue to be bullish about the prospects of the company. It's been a solid company, good returns. We have Minika joining us to talk to us about the results, break those down for us, as well as with regard to what brokerages have to say. Minika.
Yes, so Profit did see more than 75% of year-on-year growth, and the revenues were up 21%, and they also saw significant margin expansion. Up first, we have Nuvama, which has maintained a buy rating on the stock and has raised the target price to 1,492 rupees. Now, even when the industry volume growth in the consumer staples and discretionary spending has been muted, Varun Beverages has been an exception, and the growth levers like product and distribution expansions have helped sustain the growth. And the company's also guided a planned capex of 3,600 crores for CY24, and the brokerage anticipates higher realizations on smaller pack sales. Then we have Motilal Oswal, which has also maintained a buy rating at a target price of 1,500, and they've increased their calendar year 25 earning estimates by 7% and raised the volume growth estimates for 2024 and 2025 to 16 and 14%. And they expect the company to maintain higher earnings momentum on higher penetration, higher acceptance of their newly launched products as well. And then lastly, we have MK, which has upgraded the rating from a reduced to an add at a target price of 1,400. The Q3 revenues are broadly in line with the estimates, and they have also as well cited capacity expansion and distribution expansion as well as new product launches as something that would keep on the bullish earnings momentums for the company. And they've also mentioned that the company does grow faster versus its peers due to the outlet expansion of 15% year-on-year.
Thank you for that. Now, moving on, yet another stock in focus was Tata Chemicals. Its Q3 profit missed estimates and margins saw a contraction. Varsha joins us with more.
So hi guys, so interesting thing about this company is the share price of Tata Chemicals slipped 4.4% in early trade today, but it did recover despite company posting really weak results. Now if you see the results, so there was an impact on revenue and EBITDA. Now this was due to lower volume in soda ash and pricing pressure. Of course, a company has reduced its gross debt to 5,900 crore, but if you see US volume was lower by 80,000 metric ton. Now this was due to plant shutdown and rail card shortage, which led to lower absorption and increase in fixed costs during the quarter. Rallis, which is one of their subsidiaries, the domestic business registered volume and margin improvement, but international business saw some challenges, of course. And also the container and flat glass sector saw impact. It was impacted in Europe, but Latin America also is experiencing a slowdown, especially in lithium. So this all is with Tata Chemical results, but we did see recovery in the stock.
Right, thanks so much for that, Varsha. Quite a dramatic recovery there on Tata Chemicals, as correctly put across. But let me quickly move it across to Jupiter Wagons. They've come up with their third quarter numbers as well, and net profit has gone up by 82% year over year. Meanwhile, revenue has jumped 39%. Now, earlier today, we spoke with the managing director, Vivek Loya, about the order pipeline of the company as well as the guidances going forward. Listen in to all that he had to say.
Tenders for about 22,000 wagons are already out, so they are under deliberation, and we expect another 10 to 20,000 wagon orders in the very near future. So, in terms of the order size, I don't see a challenge at all. Besides this, also we are seeing the traction on the private sector continue. So whatever we are delivering every quarter, we are seeing renewed orders coming in from the private sector.
That's Jupiter Wagons Management. Another stellar listing that we've seen is BLS E-Services. Shares have listed at a premium of 142% on the BSE, listing at 309 versus an issue price of 135. We caught up with their management as well on the growth trajectory going ahead. Listen into a slice of that conversation.
BLS e-services is in the business prime of Digital India. We are providing services under Digital India across the length and breadth of the country. We have more than 98,000 touch points spread across all the states and union territories of India. In this business, we provide services under 3 segments. First is the business correspondent to major public sector banks and private sector banks within India, where we work for banks like State Bank of India, Bank of Baroda, and in private sector we work for banks like HDFC, Karur Vyasa, amongst other banks. We work with more than 15 banks now, wherein people in upwards of 24,000 centers spread across India. People come for banking transactions like opening of bank account, deposits of money, transfer of cash. This infrastructure is mainly provided in the semi-urban and rural part of the world, part of India, for making inroad into the the unbanked population of the country. Then we have a segment which is the e-governance segment. How we work in our parent company in Visa Outsourcing. Similar kind of model is adopted here, wherein we work with different states in India like UP, Rajasthan, Karnataka, West Bengal, different kind of government services like birth certificate renewal, driving licenses, arms licenses, Aadhaar, PAN card. Things are outsourced to us by the local state government department on an exclusive basis, wherein we operate the center. We have a steady footfall of customers that come exclusively to us to avail these services. And then the third segment is assisted e-services. Now we have a footfall of around 4 lakh people that come to our centers every day for availing either the business correspondent services or the e-governance services. So we were thinking what way we can upsell and cross-sell different kind of products or services like insurances, demat account openings, bank KYCs to the existing customer base. So that is the third segment, assisted e-services.
Okay, Shekhar, going forward, is this mix likely to change? Where's the bulk of the latest demand coming in? What businesses is it coming in? I know you've already elaborated to a certain extent. Banks, I reckon they're their largest clientele. But going forward, how does FY25, FY26 look like?
Correct. So if you see last year, the business correspondent contributed around 66%, followed by 24% from our e-governance, and the rest business came from our fairly new assisted e-service business. This is mainly because, we acquired certain companies in the last 1 or 2 years that led to a boost in revenue in this particular segment of business correspondent. But having said that, going forward, we see that, we see good growth coming in from all the segments, wherever we are operating. In the business correspondent segment, if you see now, we started working with only one major public sector bank. Now we've empaneled many other banks. We are in the process of expanding into different banks, expanding the reach across additional network. Even banks are now adding additional products. So we are getting incremental revenue from the same touch points. So we see good growth coming in from the business correspondent sector. Having also the e-governance sector, if you see, the model is phenomenal. We open centers at our own cost. People get services in a timely manner. Government, is happy. Customers are happy. So we see this model evolving into different states. Land record registration services have been outsourced to us in West Bengal. Other states are also considering outsourcing. So we see good growth coming in from all the segments of the company.
Right. So Shekhar, from what I understand, you guys are net free cash flow positive. You guys are debt free. Given the kind of plans that you guys have on the anvil, will your internal accruals be enough for you to go ahead and expand, or would you in fact perhaps look for some sort of debt going forward sometime in the future?
See, at BLS, first of all, I would like to mention that we like these kind of businesses. We like running companies which are mostly debt-free, negative working capital business, upfront cash collections. A similar model we followed in BLS e-services. It is a negative working capital business. It is throwing money. We are generating good profits, cash flows. But we are looking, at different kind of investments within the company, also expanding on inorganic basis. So definitely, the money that will be raised through the IPO, certain part will be used in inorganic expansion. The money that will be generated from the profits of the company will also be used for further growth, be it acquisitions or investment within the company.
Right, so that was BLS E-Services. What a stellar listing there, Pallavi. But with that, we're completely out of time on this edition of Market IQ. Of course, we'll have more on the other side, but stay tuned to NDTV Profit. For now, from Pallavi, myself, everyone who puts the show together, thanks so much for watching.